Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. Happy Monday. I think I'm feeling a little bit better than I was last week. Again, I apologize for my voice. It's a little bit better, but it's not perfect. So again, happy Monday, everyone. In this video, I'm going to show you the stocks that I bought with my $100 deposit. And what I do is every Monday morning is I deposit $100 and I use M1's Auto Invest. And what that does is it invests the money depending on your allocations. And we can see here by actual and target that I am underweighted in this portfolio slice and this portfolio slice. So the $100 is going to go somewhere within here. And if you're curious what is in my dividend portfolio, I'll leave a link below so you can see my M1 slices and pies within there. You'll see all the companies and the percent I have allocated to each of those. So what we can see here is over the last year, though, the portfolio is up over 14%. And then when you count in the dividends, we're close to 19% at 18.92%. You can see we're at all-time highs of the portfolio, creeping towards $280,000. Now we drop back into the 260s. You can see we went down middle of December, kind of caught some traction there at the end of December, and now we're back into a little bit of a slide. And for me, that does not concern me at all because I'm still investing in the portfolio. And even if I were just drawing dividends, I still wouldn't be concerned because it's just the principle. I'm not selling shares. And that's what my game plan is in the near future, is to just live off of my dividends and not sell any shares. So let's go into the activity log and we'll see where that $100 went to. We can see there's 4 buys, and there's my deposit with the $100. But I did have a dividend roll in over the weekend from Illinois Toolworks, so that's going to be one of the buys. We can see that's why it's over $100, the 108.59. It looks like some of the money it was unable to resolve, so it'll use up that money in my next deposit. And I usually do a video in the second part of the week on Thursday or Friday, and I pick 5 stocks to put in $20 into each of those. So without further ado, let's go into the trading here that happened just this morning, and we'll see what those 3 picks were based upon my allocations. So the first thing that came up was Illinois Toolworks. Again, this is a dividend drip, so we'll see the next dividend for Illinois Toolworks go up. So the 881, that bought 0.03585 of a share. So it's going to make the next dividend for Illinois Toolworks a little bit higher. It's going to add a few cents to it. And it looks like the majority of the $100 went into Oracle. So 51.46. I'm surprised because Oracle has been actually a pretty good grower for me. And as far as it pays a low dividend, and it grows its dividend every couple years. It seems like every 2 years it does a double-digit dividend increase. But Oracle's been also just with stock appreciation has been pretty good for me. So the 51.46, that bought 0.33638 of a share. So about a third of a share of Oracle there. And then next up, Qualcomm, $46 even. That bought 0.29605 of a share of Qualcomm. We're also going to see what the next dividends are going to be for all of these stocks with the dividend drip as well as the $100 deposit. And then on my overall dividend income for monthly, quarterly, and annual, we'll see that bump up as well. And we'll look at some historicals too at the portfolio. So then it looks like $2.32 went into Union Pacific, and that bought a tiny fraction of a share, 0.01034 of a share. But we'll see if this $2.32, we'll see if it even adds a penny of dividend income to Union Pacific. But I know this doesn't seem like much as far as buying, but I'm doing 2 buys per week, and sometimes I'll do like a larger buy. I think it was like a month ago I did a $1,000 deposit, and those chunks of course scoop up more shares as well. And I'll do more of those probably in 2025 as well. But just all these add together with the dividend drips, it builds up the portfolio. It adds to the dividend income as well. So let's jump on over to my Google Docs spreadsheet where I track all the positions in this dividend portfolio. I also track my other investments as well. My M1 taxable brokerage account over here, this is 15% of my net worth, and this portfolio really started in 2020 is when I really started dumping money into it. Before that, I was mainly just investing in my 401k and a Vanguard taxable stock brokerage account into ETFs, and as well as an IRA I have over at Vanguard. But we'll get more into that as well. I'll reveal what else is in my net worth, and we'll show the tracking of that as well. So back to the Google Docs spreadsheet. Everything on this sheet is in the dividend portfolio, and you can see it's arranged by company, ticker symbol, the current share price using a Google Finance function, pulling that price live. Here is the average price that I purchase into each investment. Here's the number of shares I own. Here's the current value if I were to sell that position. Here's the cost basis. You can see with Apple doing quite well with that. You can see here's my gain or loss with it. And that gain or loss in a percentage, anything above 25% will be in green. And then here is the dividend per share. And then here's the current yield. I'm not sure what happened there. Let's copy this over. I must have deleted that field inadvertently. I just copied it back over. Just copied that math from the PNG. So somehow I was probably just on that cell and inadvertently deleted it. Here's the yield on my cost, current yield. If I had to purchase more shares of Apple, for example, everything is sorted on this page by the pay dates. And we'll scroll down to January, since we're in the January payers. We'll take a look at those real quick. So we are in the light greens. You can see I have it color coded, and it goes by light green for the first month of the quarter. The second month of the quarter will be in the medium greens. You can see here, these are the announcements so far in February. And then you can see a few of the March ones are already announced, and that's in the dark green. And then the blues, those are my monthly payers, O and BST. Those will pay me every single month. And look at BST, that one's over $500. That one's a nice one. And right now what I'm doing is I'm just dripping all these dividends back into the company that paid them. But I think sometime in 2025, I'm going to let Auto Invest reinvest those dividends. But we're not quite there yet. So let's take a look at the dividends we've received so far in the month of January. And the sum is $66.90. So we can see on the 16th, I have a couple of dividends I'm going to roll in from O and Fifth Third. So I'm going to get $32.61 approximately. I say approximately because sometimes I buy fractional shares after the ex-dividend date. I may have bought fractional shares of O, for example, after the ex-dividend date. So it'll be close to that for these investments. What I've done is I've hard-coded in the current dividend for Qualcomm, Union Pacific, and Oracle, because remember, those were the three that the $100 went into. And then we're also going to see Illinois Toolworks. Its next dividend is going to go up by a few cents as well. And then I've hard-coded the monthly, quarterly, and annual cash flow for the portfolio. We're going to see it go up over here in the green. And also in the next dividend, that's where it's going to change and go up for those amounts for Union Pacific and Qualcomm, Illinois Toolworks. We'll scroll down here. And then one thing I keep forgetting to do is to go over my 2024 goals. And you can see all of these have been crossed off, so they've been met. So one of the goals was 3,600 shares of SCHD. Let's see where we're at right now with that. So 36.32, we beat that by 32 shares. And then to have a portfolio value of $250,000. And we're well above that, but who knows where it's going to go, though. We've been trending downwards. Wouldn't surprise me if we go in the 250s, 240s, or wherever. It doesn't bother me. And that's why I'm a dividend investor, is because, like I said, I may be drawing on dividends in the near future, and I don't want to have to rely on the stock market to tell me when I can step away from my job and draw dividends. And the next goal is $1,000 a month for the average monthly dividend. And we can see the portfolio is generating well over that at $1,035. And then $12,000 annual cash flow average. Also, if we beat the 1,000, we've obviously beat the annual there too, as well. A little bit of a repetitive goal there. Net worth of 1.75. We're just above that right now, but we did meet that in 2024. 2,000 shares of BST. So we'll see where we're at with that. That 2012 shares, so we beat that obviously. And then this one corresponds to that, the $500 a month. So let's get rid of these real quick, and then we'll delete these. We'll copy the goals here of 2025 and just go over those real quickly. So like I mentioned before, reinvesting the dividends using auto invest. Right now, like I said, I'm reinvesting those dividends right back into the company that paid them. And we'll see what effect that has of, like, for instance, here are my dividend payers so far, the 66.90, but take a look at the next dividend. So 66.90, but it's going to pay 70.50 for the next dividend. It's actually going to pay a little bit more than that because we haven't updated the sheet with the Illinois Toolworks dividend drip. Let's go ahead and do that, and we'll do that difference again. So we grab the data over at M1. We go to the Holdings tab, and I'll leave a link below, like I said, so you can see everything that's in this portfolio. 52 positions. Most of it is in SCHD. Here's my cost basis. Here's the current value. You can see the unrealized gain. That does not include dividends. We'll scroll down if you want to just take a quick peek here and see what's in here. Nothing really surprising. You may wonder, what's KKR? That's been a good investment for me. Oracle, where my money went to as well. There's just mostly household names in here with a regional bank, sprinkled in. But, Home Depot, I'm sure everyone has a Home Depot in their neighborhood or has a Procter & Gamble product in their medicine cabinets, or goes to Starbucks, or drinks Coca-Cola, just things like that. Just typical things you would see in a dividend portfolio. So I'm going to grab everything from the name column, and what I'm doing is I'm grabbing the data from M1. I'm going to paste it into my sheet. I've arranged my sheet so I can extract this data automatically, so I don't have to type in the new shares average price I've paid for the shares and the cost basis for those positions where I bought new fractional shares in. I go with the M1 data tab, and once I paste this in, it's going to automatically change the positions in the 4 stocks where I bought more fractional shares in. So I paste that in. We'll go back over here. We're going to see the changes here. We're going to scroll back over here. I think we're already over there. And we'll see the changes in Qualcomm, for example. The dividend paid in in December 20th, in approximately March 20th, the new dividend is going to move from 732 to 757. So we can see how these little incremental changes, how it bumps up the next dividend. And of course, dividend drips will do it as well. And just that tiny $2, how much was it? The $2.32 did make a little bit of a difference. It did bump up the next dividend at the end of March for Union Pacific. It's going to move from $5.93 to $5.94. And then here we see Illinois Toolworks. This is what I was paid on January 11th, $8.81, and the next dividend in April 11th approximately will be $8.87. We'll do that comparison real quick. It's going to change it by 6 cents, but $66.90, and then April these same stocks will pay me $70.56. See how this works just with dividend drips and these $100 deposits. And Pepsi and Kimberly-Clark, I think, are the only two recently where the $100 deposits kind of went in there and bought a little bit of fractional shares there. And then next up, Oracle, moving from $5.53 to $5.66, and Oracle pays a low dividend. It's a 1% yielder, but we'll see how this one's been a pretty good grower. I've made 79% with Oracle. And like I said, every 2 years they grow their dividend double digit. And I put VAR in their increase month because it's variable for Oracle. You can see like Cisco, we can pretty safely expect probably a 3% dividend increase in February for Cisco. You can see where I've got the increase month there. And I think, was that the last one? Was Oracle? It was. So we've got that. We'll just delete that. I'm going to probably receive 553 for Oracle in the end. Actually, on January 24th, it's not going to be 566 because the ex-dividend date has come and gone. That's going to be in April, will be the 566 there. So we'll scroll down here, and here is the old monthly cash flow was at 1,035.29, bumping up to 1,035.44. So just adding a few cents there. And then quarterly, moving from 3105.87 to 3106.32. You can see a little bit bigger of a bump in the annual, moving from 12,423.48 to 12,425.28. What we'll do is we're going to take this value, the monthly cash flow average. I track that on the monthly average dividend tracking tab. So we'll take that 1,035.44 and we'll put this in the bottom. This will be because of $100 deposit. And again, sorry about my voice. It's holding up relatively well, but still don't have my voice back. I feel fine. And hopefully you guys are feeling fine out there as well. I haven't been by this bug. It seems like everyone I know has kind of experienced it. So here is the event, the Illinois Toolworks Dividend Drip, $100 deposit. So that added a whole 15 cents to my monthly income. Well, that's every month going forward. We'll take a look at the total, what we've done in January. These are all the events that have added to my monthly income. So we've added 86 cents. So it's been pretty modest because it's just been a couple $100 deposits and dividend drips. There hasn't been a big event like BST, that dividend drip. You can see what that does to the portfolio. Or when we get like SCHD announces a dividend increase, you can see it's, that was over $15 there. But most of them are just, pennies here and there. But over the days, weeks, months, and years, this just keeps going up. You can see, let's go back in time to 2022 where we're at. And I'm not making, gigantic, deposits into this portfolio. So on March 7, 2022, we're at 766. And just with these modest deposits and drips, here's where we're at right now. And I like to track that to show the progress, forward progress. The only thing that's going to move us backwards really is SCHD with that Q1 dividend announcement. I have a plan for that to kind of flatten it without really kind of fudging the numbers. What I may do is I'm going to take the average of 2024 and just put that for the 2025 and just change it annually. So we just have an annual change instead of these quarterlies up and down. So we'll see when I implement that, probably right when, in March sometime when SCHD announces that Q1 dividend, which will be lower. It will, it'll soften the blow of the lower dividend, but also it'll soften the increase in Q2, Q3, Q4, which I don't mind. So let's go on to the dividend tracker tab, and this tracks the dividend portfolio value. You can see starting from January 2021. Here are the dividends. I was tracking all the dividends that were paid every month, so you can see how we've increased in quarterly, and the quarterly increase in the annual dividends as well. We'll scroll down to where we're at right now in 2025. You can see the high point was in November 2024. So we're at 267 even, rounded to the nearest $100. So we're approximately really where we're at the end of October. So we're not too bad. But look where we're at a year ago. We were at 228. So we're nearly $40,000 higher with not nearly the amount of deposits. So it's not like the deposits have been keeping this afloat. And here is the average monthly dividend. You can see how this has been going up with, of course, the exception of SCHD in there. Here's the 87 cents. So we've increased it with a month-over-month gain of the monthly dividend of 0.08%. Here's the annual dividend. It says monthly paycheck, annual paycheck. And so far, just in the month of January, I've added $10.44 to the annual amount. Here's a $100 deposit in here. And usually you can see what I'm depositing. Here it looks like I put in extra grand and then an extra grand over here. So it's been pretty modest, through 2024. No huge deposits in there. And that's going to be my plan. Eventually what I'm going to do is one of these years I'm going to shut off the deposits and just drip dividends. And then eventually I'm going to start taking those dividends into my pocket, and partially to pay taxes, and then partially, to actually go into my pocket to start paying expenses. We're not there yet, but that is going to be down the road. So I'd like to get, of course, the portfolio to be larger, and of course pay more than $1,000 a month because my expenses are higher than that. Right now, my average expenses are right about $4,500. But of course, this is not my only investment or my only source of dividend income. Let's get into that on my next tab, which is my total net worth tab. So, like I said before, the M1 portfolio is right here. It's right here on this line. Let's go over the rest of my net worth. And over at Vanguard, I have an IRA. You can see it's in ETFs, VYM, VTI, VXUS. And you can see I have a Roth IRA, very small, and then a taxable brokerage account, and then the value of that over at Vanguard, $461 and change. And then over at T. Rowe, I have my current employer 401k, and that is just under 100k. It was just over 100k, so no problem. The market's going down, and you see here over at M1, I have an IRA of my previous employment, pretty much when I started my career. And this is pretty much from 1996 to the year 2019. And I didn't max out my 401k every year. There were a few years I did, but not close to every year at all. And some of that is at 690 and change. Then, like I said, here's the M1 dividend portfolio. Excuse me, I had to cough real quick. And yeah, that's that over there, the 267. But of course, it hasn't caught up. It's using Google, so the numbers are different from M1. And then over here at M1, I have an M1 savings account. I call this like my 1 year emergency fund. And over at Synchrony, I have a 6-month emergency fund. Over there, you can see I have quite a cushion, and that's because of the industry I work in. I work in IT. I work in IT procurement, and since the mid-late 90s, I have seen rounds and rounds of layoffs, reorgs, and you name it, and I've just been a survivor of so many of those. And just in case, you just never know. That's why I keep all this cash. Here's another 2 months over at Capital One, just seeing other people being cut. They call it RIFs, or reduction, in force, things like that. And it's just companies do it. And I've been fortunate, but who knows? My luck could run out. But I am prepared for that, and I could probably work part-time going forward if I really wanted to. But my net worth will probably suffer a little bit. But who knows? We'll see what happens. Here is the value of my home. And here are my liabilities. I have a single credit card. I have other credit cards that are active, but they have no balance. I have no interest in using them. This one has a 2% cash back. I pay it off in full every month. Here is what is on it right now. And here's my other liability, my mortgage at 176. And then subtracting out, my assets minus my liabilities. Here's my total net worth at 1.76 million. I was at 1.8 not too long ago, but the market decided to go lower, and that's fine. And that's going to happen because you can see for my assets, 86.3 of them are in the stock market. So it's in stocks. That's what's going to happen when the market takes a dip. I'm fine with it. Again, that's why I have this, is to provide income because, but you know, I'm not an all or nothing kind of person. I also have growth in here because I have total stock market indexes as well. So I have got, you know, the growth base is covered. I could be even more aggressive and maybe have like a QQQ or SCHG for growth, you know, and you know, cover the bases there. But I think my bases are pretty well covered there. But that's why I'm doing the, you know, the M1 portfolio is also to add some income in there as well. So we can see, you know, my home equity, that's 8% cash, pretty high, creeping up to that $100,000 mark in cash. I may have to rethink that, but again, that just helps me sleep very well at night. And then here is the breakdown in pre-tax. And most people have their net worth wrapped up in their pre-tax in their home equity or in their 401ks, and that doesn't allow you a whole lot of freedom. You got to get a little bit more in your taxable accounts as well as cash to allow you that freedom. You know, if something were to happen to your job, or if you want to take, you know, a career change, move across the country, whatever it is, this allows you to do that. Here's the breakdown with US and international. Here is my average monthly dividend for everything. Like I said before, remember the $1,035 for the, there it is right here. I also expressed it here, my average monthly dividend for the dividend portfolio. Here's everything counted. So if I had access to all this, if I was 59 and a half, I'm not, I'm 51. Here's my average monthly dividend would be. And with my house paid off, I could easily live off of this, not sell a share of anything, not dip into my savings, and just live off of my average monthly dividend. That is my sole goal, is to do that. Not touch the principal and just spend the dividends and interest. I think it's a pretty good plan. And that's what I'm doing right now. So you can see my net worth, even though it's gone down over the last month. Let's just take a look how it's been tracking, though, from November 2022. And we were at all-time high of 1.827. We went down the 1.7s. We're still in the 1.7s. We're down even further than we were from December. So we're tracking downwards. But that's not a problem to me. Excuse me again, I got a cough. Sorry about that. Again, we're going to wrap up the video. I'll show you again. You'll go to the activity log here real quick. And the $100 went to Oracle, Qualcomm, and Union Pacific. Again, Illinois Toolworks. That was a dividend drip. Let me know in the comments below what you think of these three buys. Also, let me know what you've got your eye on to buy this week. Thanks, everyone, for sticking to the end of the video. Please click the like button to help support me, because I'm not selling you guys anything. I'm not doing Patreon or any of that stuff. No merch, nothing. I just want to show you guys what I'm doing and just kind of get you guys on the right track of investing and building wealth. Also, subscribe so you do not miss my future videos. Next video will be the video where I pick 5 stocks to put $20 into each of those. It'll be either on Thursday or Friday. Thanks again, everyone. I hope everyone has a great week.